JJ, the CPA here. Hold up. This is a great time, as you're getting things ready, not only for filing, but for PPP. Everybody's like, hey, am I a sole proprietor? Am I a self-employed? Am I a partnership? Am I an SCorp? Am I an LLC? Am I a C Corp? What does that all mean? If you're an LLC, the first thing I want you to know is you can be any of those things that I just said. C Corp, partnership, S Corp, sole proprietor, disregarded, single member LLC. Whoa, it's a total chameleon. Let me tell you this. There's two things to think about when you're starting a business. If you have a business, are you actively involved? Are you actively involved? You need to be an S Corp. Don't be a sole proprietorship, be an S Corp. You're actively involved, be an S Corp. If you're actively involved, do not be a partnership. Now, when I say, hey, so what are you? Like, oh, I'm an LLC. It tells me nothing, okay? That's like saying, hey, I'm a human. Okay, what? All you told me is you're a human. You've told me nothing, right? So when you're actively involved, when you're an S Corp, it comes down to one thing. You ready for this? I'm going to save you $1 million right now. If you're not an S Corp and you're actively involved, I'm not even kidding around. I'm going to save you $1 million. If you're an S Corporation, the net income is not subject to self-employment tax. Boom! Don't wait, don't leave. This is the most valuable video you're ever going to watch, ever, of all time. It's worth $1 million and you're going to pay this much for it. Let me tell you this, not even a gimmick. It's not even a gimmick. It's not even aggressive, okay? It's just knowing the law, okay? If you're not actively involved, then be a partnership. When do you want to be a sole proprietorship? Never. Never. Okay? Now, you just starting out, maybe do the sole proprietorship. You're just doing something once a week, once a month, you're not really making any money. Okay, sole proprietorship, right? Keep it simple. But if you've got a business, you're ready to rock and roll, you want to be an LLC because you can be everything. But if you're active, you want to be an S Corp. If you're not, you want to be a partnership. Those are really the two. When do you want to be a C Corp? Okay, if you're planning, like for real, you're going to have a bunch of shareholders, you're going to shoot that value up, and then you're going to sell that puppy off. Boom, C Corp. You plan on taking it public? C Corp, okay? That's not really reality. And the good thing is if you're an LLC and you're a partnership, you're an S, you're a sole proprietor, you're a single member LLC, and you decide, whoa, I got something really good here. I'm going to bring in some shareholders. I'm going public. Guess what? You're ready to rock. You can become a C. No one starts out being a C. It's like saying, I'm going to come out of the womb and I'm going to be a 50-year-old person, okay? C is for the next step of the next step of the next step. You don't start out being a C, okay? You don't. Here's the deal. The reason that the S Corp is so coveted, okay, it's so valuable, is that the net income, and I already know right now, right? Those that are familiar with it are like, oh goodness. Here goes one of those CPAs, tax professionals, EAs, going to tell us all about this. Okay, don't listen to that individual. Okay, that's who you want to go ahead and fire. You want to find somebody that's like, yeah, it makes sense to be an S Corp. Because the net income that flows down to the individual, taxed at the individual rates, is not subject to self-employment tax. What? That's a 15.3% tax. Big deal. Big deal. Okay, if your individual income tax rate is 37% plus a state rate, call it 5%, you're already paying 42% on your net income. Now we're going to add 15.3% to that, and it's not a big deal? What? Here's the deal. If you're not actively involved, be a partnership because it's not subject to self-employment tax. Here's the key. Here's the key to life. When it comes to taxes, when it comes to owning a business, you ready? The key to it all, the key to saving $1 million over the life of your business is not paying self-employment tax. Now there's a catch, you always know there is, but it's not a big deal, okay? If you're lazy and you want to pay $1 million, go ahead and go to the next video. But if you're not lazy, which you ain't, because if you own a business, there's no way you're lazy, okay? You do have to do payroll. They're like, yeah, guys. Gotta do payroll. Now what? I'm gonna have to pay somebody to do it. Now I gotta do payroll. Now I gotta do this. What do I have to do? Okay, that's a lazy butt. Okay, lazy butts don't need to watch this video. Lazy butts want to go ahead and waste $1 million. Lazy butts, you know who lazy butts also are? The ones who are like, how much is this going to cost me, JJ? What's your fees? I'm going to save you $1 million. I know you said you were going to save me $1 million, but what's your fees here? Okay, I get it. Good business person. What's it going to cost me? Got it. Okay, but here's who wants to save money. A smart business person. Well, if you're watching till now, you're clearly a smart business person. You got to pay wages. Big whoopee hoo. Okay. Why does that matter? Because there's going to be some, because I talk around the nation to a lot of different CPAs, and you got the old ones, you got the young ones, you got the ones that are like, well, I don't know. It seems like a lot of extra work. Seems like it's going to be more fees. It's like, okay, are we in the business of worrying about what our clients are paying in fees, or are we in the business of saving our clients taxes? Because that's the business I'm in. Why am I even doing returns if I'm not going to try and do what I can to save my clients taxes? Okay. So you pay yourself a wage. Okay. You're in an SCorp. What you got to do is control the amount that you're paying in Social Security and Medicare. Now. I know there's going to be some people like, yeah, but see, you're affecting millions of Americans when it comes down to their Social Security that they're paying in, and that's going to affect what they're going to get out of retirement. True, but I'm not talking about being an idiot and paying yourself a wage of $12,000 or $24,000 or even $46,000 of income. I'm talking about being a mature adult business owner that's going to pay themselves a decent wage, that's going to represent a decent amount of money. There's only so much of your income, self-employment tax, and payroll tax that goes towards Social Security. There's no one on Social Security, okay, sitting back with the gold watch collecting more than about 25 grand a year a piece, okay? They don't happen. I work with some wealthy freaking people. None of them are getting more than 25K from their Social Security, okay? Here's the deal. Do you want there to be Social Security? Yes, okay? So let's just run it. Let's just run a couple numbers here, right? Super simple, okay? Let's say that you're netting 100K, okay? If you're down doing a sole proprietorship, or you are a partnership actively involved, you're just gonna lay there like a fish on the beach, and you're just gonna let 15.3% be assessed and charged to your net income. And listen, if this sounds like it's getting too much, you just spent $1 million hitting next, okay? So stay with me on this one. Stay with me because it's worth it. I've made an entire career. The basis of JJ, the CPA here, is the SCorp. It's not being lazy, it's being aware. So you make 100K, you're active in a partnership, you have a sole proprietorship. You go, yeah, but you know what? I didn't have to do payroll. You know, I didn't have to mess with all that stuff. It's just easier. Okay, well, you just paid $15,300 in self-employment tax. Congratulations. Yeah. Okay. Now, you're going to say, well, you know, okay, but I mean, I got to pay a lot of taxes anyways. Okay, well, on 100 grand, you're paying income taxes. You're probably not at the highest rate of 37%, but you're going to pay you some income taxes. Okay. I mean, just pick it. Okay. Let's just say that your blended rate, the itemized deductions, I don't call it 25% federal tax, 5% state. You're at 30% regular income taxes. Add 15% to it. Now you're paying 45% in taxes. Who's the idiot? Okay. Who is the idiot? Okay, that's letting you do that. No offense. No offense. Now, well, you know, there's certain circumstances that'll make sense to be a sole proprietor, and you know, do the SCorp versus the partnership versus the Schedule C. Okay, yeah, if you're gonna net like 10, 15, 20 grand, then yeah, maybe it doesn't make any difference to do this, because by the time you set up the separate return, you do a separate tax return, you do all the payroll, you pay the payroll processing fees. So, you know, you're gonna spend like, you know, between payroll and all that, blah, 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 you're going to spend, you know, $1,500, $2,000, right? So yeah, would it make sense if you're netting 20 grand, but that's my number. You're gonna net more than 20 grand, net more than 20 grand, okay? Then you wanna be an S-Corp if you're actively involved, okay? If you're making more than 20 grand, then you start kind of looking at this. But if you're getting into business, are you gonna net 20 grand forever, okay? If you are, then just stay sole proprietor. You can be an LLC sole proprietor, okay? I'm talking about, and I'm not saying that if you make less than 20 grand that you're not a successful person, okay? What I'm saying is most business owners, okay, that are going to make a living based on their business plan to make more than a net 20K, okay? Most business owners that walk in, they're ready to take over the world. They're gonna net 100 grand, 150, 250, a mil, okay? They're planning on netting bank, okay? That's the kind of client that I'm interested in, netting bank, or at least plan to do those kind of numbers. So when you're now talking about 100K, you paid $15,300 in self-employment taxes so that you wouldn't have to pay other people to do a separate tax return. You didn't have to do payroll. Good job, okay? You still paid $15,300 in self-employment taxes. Now, let's just run the numbers. Let's say that you net that 100K and you go, you know what? I'm gonna, out of that, okay, I'm gonna pay myself a wage of $60,000. That sounds pretty good. Sounds pretty good to me, right? 60K. And then the first question is like, whoa, but how am I gonna get that money, JJ? It's 100K, I need 100K. Okay, settle down for a second, okay? I've been doing this 27 years. I'll get to that, okay? I'll get to it, okay? But right now you're lost. You're like, wait a second, I'm only gonna get 60 grand out of this? Listen, I'm JJ the CPA. You're gonna get your 100K. Stay with me, stay with me. Okay, you pay yourself 60K, okay? You are going to pay payroll tax on the $60,000. You're gonna pay the 15.3%, but only on $60,000, okay? So what are we talking about here? That's still 9K, okay? For those that are like, well, you don't want to affect your retirement, okay? Okay, I didn't. I paid in 9 freaking K towards my Social Security, towards my retirement. What's that going to make a difference in retirement? What, $100 a month? Let's get real for a second, okay? It still will be around, but 9K into Social Security, wouldn't you rather put 9K into something else, but nonetheless you did it, okay? Now what did you do though? On $40,000 that you can take as a distribution, I'll get to that in a minute. Don't get your mind swirling. Going, wait a second, how am I gonna get that money? Now what, like everybody just starts focusing in, like how am I gonna get all that money? You wouldn't call me JJ the CPA for nothing. Hold up. Okay, so on the 40 grand that you're gonna write a check to yourself, it's gonna be called distribution. Well, JJ, like, so how do I do that? You're gonna write a check to yourself, not through payroll. In the little box, you're gonna call it distributions, okay? That solved it for you? Great, because on that 40K, you're not gonna pay 15.3%. What's that number? I don't know, 6 grand? That's a ton of money, okay? I don't know, you're gonna be in business for 20 years? Yeah. I mean, well, 6K, 20 years, that's $120,000. That's a lot of money. Yeah, it is. That's a lot of money, okay? That's just on netting 100K, right? What if you net 150? What if you net a mil, okay? Now, in all fairness, the Social Security tax is at a limit of $137,700, okay? But here's the thing. If you paid yourself 60K, okay, here's the other thing that the business owner goes, well, I'm worth more than 60K. I'm worth all kinds of money. That 100 grand, I'm going to get me 100 grand. Okay, then let your ego allow you to pay, in this example, another 120,000 over your career. Congratulations, your ego is intact. Okay, but when you're the owner, what's it all about? It's about putting coin in the pocket. And you want to put the most coin in your pocket with the least amount of change heading over to the IRS, everybody's favorite charity, right? So in this example, it saves 6K. Like, whoa. You're going to have to do some payroll to do that, and you're going to have to pay a CPA or an EA or a tax professional to do your tax return. Okay, well, let's put it at $1,500 a year, $2K a year, whatever. You save 4 grand. Well, you know, that's a lot of effort and time. It's 4 grand a year. on a net 100K. If you're netting 100K, no offense, that's a freaking great living. But if you're netting 100K, okay, $4,000 adds up. That's a lot of money. How many clients, how many things do you have to sell to net 4K? And you're netting 4K. You're like, well, JJ, you told me you're going to save me $1 million over the life of my career. Okay, well, let's say that you're one of these geniuses, that you're 20 years old, and now you are starting your own business, and now you're going to have that business, 60 years? Okay, start running that number out, okay? Or you're going to net more than 100K, or you and your spouse, or you and your partners, right? It extrapolates out, right? So you take a business and you got 4 owners in it, and instead of everybody being a partnership or everybody's sole proprietor and everybody's just paying tax on 100K, okay, on the self-employment tax, now they're just paying on their wage. All of a sudden you go, well, that's $6,000 savings times 4, that's $24,000. Okay, 10 years, we're talking $250,000, boom, $250,000, okay? How long do most people work? 40 years, probably 50, right? So you have a setup correct, and you're saving yourself $1 million, you start throwing in some partners. Let's think. When you have an SCorp and you're actively involved, it is the way to go. Now, if you're looking at actively involved, what does that mean? What it means is you're in managing, you're in working, you're showing up, you're working it, okay? You're working it, okay? What is a fit for a partnership? I'm gonna put some money into something. I'll see you at the quarterly meeting, maybe annual. What's that business that I own again? What are they doing over there? Who works there? That's what you want to own through a partnership. Real estate through a partnership. Why? Because if you're not actively involved, the net income from that in a partnership is not subject to the self-employment tax. This separates, okay, the men from the boys and the women from the girls and the puppies from the dogs, okay? If you want to be a player, okay, and you want to be smart about what you're doing, okay, you don't worry about doing an extra chore related to payroll. You hire a company, don't do it yourself, okay? You hire a company. It's more than just figuring out your net check. You got things that got to get paid in. You spend a few bucks, okay? It takes money to make money, okay? You hire someone, yeah, they need to do your tax return. There's a number of other things though, but when you're a sole proprietor, guess what? You've got a big old target on your back, and I'm not even into targets and talking about the IRS and trying to scare you and this and that, but it's no secret. Top 10 people that get audited is Schedule C. Why? Because there's so much crap, waste, baloney deductions, BS, people selling something, doing no effort, writing off their house and their couches and all kinds of crap deductions. It's a target. Why? Because there's so much waste, fraud, and crap in a Schedule C. If you're a serious business owner, serious as in growing it, okay? Now, for the person that's like, well, JJ, I'm serious, okay? I'm only gonna net me $20,000, but I'm a serious business owner. Great, good for you. You're netting your 20, great, love it. I'm talking about the serious going, boom, making money, okay? You're gonna make money, you wanna be an S if you're actively involved. You're gonna invest, not be involved with it, you wanna go with a partnership. Why? Easy in, easy out. You can change how it's structured. You can do different amounts of distribution from ownership to debt, blah, 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 all kinds of other benefits for there. But that's the type of ownership you want to have if you're not involved with it, okay? Now, I'll just tell you this. No one should be a sole proprietor. No one. You should be an LLC, okay? Now, maybe your state has something, there's an LLP. You're behind the times. I live in Oklahoma. We still ride horses to work. We don't have LLPs. We don't have that LP, okay? All that crap. LLC is where it's at. It even works for trust planning. All the attorneys that are in the know use LLC for everything. You don't need a trust. You don't need an LLP. You don't need an Inc. What you need is an LLC. And guess what? You don't have to set up a whole new entity. You can just convert to an LLC, not a new EIN, not a new bank account, not new checks, not new QuickBooks, okay? LLC, right? Why? No stock. It's got a membership interest. Someone sues you, they can't get anything except money you're gonna pull out. That's easy. Don't pull any money out. Just do a wage. You got stock, boom, someone can take it. Now that company's theirs. The LLC is where it's at. The SCorp is where it's at if you're actively. The LLC partnership is where it's at. Everything should be an LLC. End of story, because it can be everything. Now, listen, the ones that are saying, hey, well, JJ, there's a lot of different situations, and different opinions on that. It's not a difference in opinion. It's knowing what it is that you're good at, and then you do it that way, okay? Is there different ways to operate on the brain? Maybe, okay? Maybe. But when you're operating on the brain, are you going to go with the one that's the cheapest? Are you going to go with the one that's like, oh, you don't want to operate? Do you want to go with the one that's like, well, let's take these utensils over there and put them in the dishwasher? Okay, who am I making fun of? I'm making fun of the lazy tax preparer. I'm making fun of, and maybe I'm giving a voice that makes it sound older. I don't mean that, because I know some older CPAs, EAs, and tax professionals that'll whip your ass. I'm talking about the ones that when you ask them a question, they don't let you finish the sentence. I'm talking about the ones that focus in on what the fee is, okay? They're driving a Hyundai. You drive a Hyundai, don't mean to insult you, but they're driving a Hyundai, okay? You know why? Because they think people want to hire them to pay the least amount of fee, okay? Tax preparers and tax professionals and EAs and CPAs, we're a conservative type. Not me, but nonetheless, we are. So we think typically people want to hire us and pay the least amount. I want people to hire me, and I'm going to charge them for my time and my effort, and my clients all say, whoa, I'm saving way more than what I'm paying JJ. And you know why? Because I'm thinking I'm on the edge, and I don't mean illegal, and I don't mean aggressive, because check this out. How long have I been practicing? Going on about 28 years. You know how many adjustments I've had in an IRS audit? Zip. Zero, none. I have never prepared a tax return and there's been an adjustment. I guarantee if those that are watching this kicking back, got their straw hanging out of their mouth, going, well, that old JJ, I bet you've had an adjustment. I bet the lazy ones have had the adjustments. The ones that say, oh, IRS ain't going to allow that. Get audited and have adjustments. You know why? Because they're lazy. Okay, and that's how they control their clients, by just throwing out the word IRS. I've never met an IRS agent that I didn't like. They're great people. They're just there to follow the rules. Very respectful. Here you go. Boom, boom, boom. But when you're doing this stuff, you got to do it right. You got to have an LLC. You got to have a separate bank account. You have an operating agreement, separate assets. You got to title things correctly. You have to do it right. Perfect. The end. You want to be lazy in any aspect of this, then you're going to get your ass whipped. And you deserve it. Why? Because you didn't do it right. How do you do it right? Perfectly. You look at the big companies. How do they do it? You do it that way. How do they do it? LLC. Boom. You are active. You're going to SCorp. Why? You save it. You got to pay yourself a reasonable wage. If you're the yay ho ho, okay, that nets $100K, and you're going to go around and you're going to pay yourself a wage of 20, 30, 40 grand. Okay. You're an idiot. You're dumb. Okay. You're just asking for it because you're the one that goes, oh, well, if a little bit's good, then more's better, okay? And before you know it, you're completely upside down, and you've not followed, in essence, the spirit of the rule, the law, okay? So I don't have lazy clients. I have clients that are interested. When people say, hey, JJ, what kind of client do you work with? One that is interested. I don't have clients like, yeah, you just take care of it, JJ. I don't want you. Out. See ya. I want to talk to you. We're going to go through it. We're going to make adjustments. You're going to be this. I don't bring on clients. If I bring on a client and they're a partnership and I say they need to be an S, and they're like, woo, woo, and boom, out, get out of here. Okay. If I bring on a client and they want to do their own payroll, guess what? You ain't going to be a client of mine. Okay. So actually the first rule, you want to do your own payroll? Out. I don't do payroll. Out. Okay. Who does your books? Oh, well, I do an Excel spreadsheet. Okay. Maybe that's good for you and you're an engineer and you can hack it. Great. Good for you. I'm not talking about that. I'm talking about good old-fashioned bookkeeping. You're doing it yourself? Well, you better be an accountant. Let me see what you're doing, because guess what? You better have someone keeping your books, because I don't have time to clean up crap, okay? You bring in receipts? Out, okay? You keep the receipts, right? I'm dealing with people that are interested. What are they interested in? Saving taxes. Here's how I make a difference. I say, here's what you can do about it. I don't just say, here's your tax. I don't just say, here's your vouchers. I don't just say, here's what you owe. I don't say, hey, you got a refund. I don't say, can't do that. IRS says no. Okay. What I say is, what are we doing here? How does that work? Let me think about it. Well, there's probably a way we can do that. My grandfather taught me that, who was a CPA, Omar Abbott Slater, CPA, laid out everything that I follow, and it's about this. Doing it the best that you can, working with clients that trust you, but then are interested and want to implement things and do it correct. And third, you don't take the lazy way, you don't take the cheap way, okay? The cheap way is, I'm gonna waste $6,000 a year because of. The lazy way is, well, I don't really wanna do the extra tax returns. I mean, it's just, gosh, is that the kind of person you want doing your taxes? Okay, let me tell you this. The serious CPA, the serious EA, the serious tax professional listens and says, yeah, that's a good idea. And or says, hey, you know how you're structured? We want to do it this way. We want to do it that way. And let me tell you the other secret. Let me tell you the last secret right here. How do you know you have a really good CPA, a really good EA, and a really good tax professional? You ready for this? You don't tell them, they tell you, starting with, here's my fee, you better pay me. Boom. JJ the CPA, out.